China's President Xi Jinping arrives in London tonight at the start of a state visit that looks like being the richest in ceremony, at least, of any state visit in living memory. But will it be similarly rich in deals for the UK economy? With me is Chris Giles, our economics editor. Chris, how much is in this trip for Britain?
Well, certainly the government hopes a lot in this trip. I think 3 areas of foreign direct investment where they want to get Chinese money into infrastructure projects to finance them, not to pay for them. Of course, British people will ultimately pay. The big one is the nuclear industry. The Hinkley Point plant is the deal with the French and the Chinese together, financing and building that, and maybe more nuclear projects. HS2 is the second deal that the government is hoping to get some commitment of funding. And thirdly, in a broad sense, the Northern Powerhouse, various infrastructure projects north of London. And so Xi Jinping is also going up to the north, going to Manchester as part of the visit, and that's where they hope they'll get some of those deals signed.
And are these vague ideas, or do we know roughly how much money might be involved altogether?
We know, at least on the Hinkley Point nuclear plant, that has a build cost of £24 billion, and then there's subsequent deals for Sizewell, and then maybe potentially a third nuclear plant, all of that sort of size. So really very significant amounts of financing, with, of course, a whole stream of income to follow. HS2 is much less clear. It's gone out to tender, and it depends on where the Chinese might want to take a part in that. So that could be a lot smaller, I would have thought, because some of the construction projects will be done by other companies. And the Northern Powerhouse, again, that's much less clear.
What about trade? Britain's been quite slow on building trade with China, hasn't it? How much room do you think there is for growth there?
Well, I think this is the other sort of big hope of this government, is to slowly build up from 4% of British exports going to China, which is very low compared with other countries. Japan has a quarter of their exports. Germany and America more like 10% of their exports. So even though it's grown up from 1% in 2001, so we've seen very rapid growth in exports to China, they're still low compared with other countries. And so again, fostering relations, hopefully they'll want deals to be done, not necessarily this week, but over time, to get that 4% higher, because it's the fastest growing export market that Britain has.
And how fast is it going to keep growing? We had figures out this morning showing that China's economy was actually doing a little bit better than people thought, but still we're on that slowing trend, aren't we?
Well, so long as you believe the figures, China's definitively slowing from growth rates in the double digits, about 10%, down to just under 7% in the third quarter. 6.9% was the official figures, but it might well be a bit slower than that. And we do expect China to slow down further. Down, the IMF thinks, to 6.3%, or between 6 and 6.5% next year. But one thing we should remember, that China is now such a large economy that if you have 6% growth or 5% growth even in that size of economy, that's still adding a huge amount of purchasing power to that country every year. So you would expect it still to be the fastest growing export market, and much faster growing than, let's say, the Eurozone, which is a much bigger player for us and a much bigger destination for our exports, but growing at maybe 1.5% a year.
How right do you think the government is to be pursuing this, what's been called this Osborne doctrine of turning towards China? There's all the debate over the benefits or not of our membership of the European Union, people saying we should be free to trade with whomever we want. Are there real gains to be had in turning towards China and away from Europe?
There's certainly gains to be had in turning towards China because it is so large and growing fast. On the IMF's forecast for the world economy, China accounts for 30% of the total world economic growth over the next 5 years. So if you weren't going towards China, you'd be having a big mistake. That said, there's no conflict between keeping your hat in the European ring and also looking to China. You just have to look at what Germany and France and other countries are doing. Everyone's seeking their share of Chinese growth at the same time as being part of Europe. These aren't either-or relationships. You can have both.
And is Britain coming late to the party then?
Britain's certainly coming late to the party. China was only 1% of our exports a few years ago at the turn of the millennium. We do certainly export less of the sorts of goods that China has been wanting, some of the capital goods. So maybe coming late is now the time for us, because some of the services, education, these sorts of things which we do now export in increasing amounts to China, as they're getting to a later stage of development, they are now the sorts of things that we are good at.
And
So
as the Chinese spenders have more money, then perhaps we can fill those needs rather than the soybeans and the iron ore.
yeah, so less soybeans, less iron ore, more education, more people coming to our universities. I think that's the future, and that's where Britain will make more money in future.
Chris, thanks very much.